PantheonAI presents Bitcoin Rallies, CoreWeave Surges 200%, Marvell Stumbles, and MemeCoin Politics. Welcome back to the PAI Morning Briefing.
And a warm welcome from me too. I'm your host, joined by Host A from PantheonAI.
Great to have you, Host B. Today is May 22nd, 2025, and we're diving into today's market insights, news beats, and hopefully squeeze in a few laughs along the way.
Absolutely. Let's not waste any time and get started with a quick look at the market overview. What are we seeing today, Host A?
Well, the S&P 500 is sitting at approximately 5,853.23, having inched up by roughly 0.2%.
Okay, a modest gain there. How about the Dow?
The Dow Jones Industrial Average is at about 41,928, showing a gain of nearly 0.4%. And the Nasdaq Composite stands at roughly 18,990, enjoying an increase of just over 0.5%.
So all the major indexes are pointing upwards today, which is nice to see. What about the smaller cap?
Over on the Russell 2000, the index is trading at around 2,042.37. That's a very modest change, almost negligible, actually.
Interesting. So the big guys are moving, but the smaller ones are kind of flatlining today. Now, what's happening in the crypto universe? I hear there's some buzz.
Oh, there's definitely buzz. Bitcoin is making headlines, trading at approximately 111,348, up by a healthy 1.53%. And Ethereum isn't far behind at around 2,673, climbing impressively by nearly 4.75%.
Wow, those are some significant moves in crypto today. Seems like every segment of the market is finding its pace, whether you're in blue chips or riding that crypto roller coaster, as you like to call it.
Exactly. And I like to think of these numbers, especially those fractional gains in the indexes, as gentle nudges. They may not grab the high-octane headlines, but they're the steadfast workhorses in an unpredictable market.
That's a good way to put it. Those small changes really do add up over time. And it sounds like the crypto market is still very much in its exuberant phase, despite the usual volatility, with those big gains in Bitcoin and Ethereum.
Definitely. Moving on, let's take a deeper dive into some of today's major market trends. While the major indexes signal a subdued but steady recovery, there's this undercurrent of uncertainty, isn't there?
There really is. You see traditional equities performing modestly, but then you look at crypto, and it's showing robust momentum. What do you think those divergent trends are telling us?
Well, to me, it's a sign that investors might be hedging their bets, keeping one foot in those dependable blue chips, but the other firmly planted in rapidly evolving digital assets.
That makes sense. It's like they're trying to capture growth potential while still having some stability. And you're right, sometimes the most intriguing narratives aren't in the broad indices, but in the stories behind specific stocks and sectors.
Precisely. Take Marvell, for example. At one time, it was considered a hot AI stock.
Oh yeah, I remember that buzz. But the landscape has really changed, hasn't it?
Drastically. Marvell stock is now down almost 50% this year. That certainly caught the attention of investors and analysts.
50%? Wow. That's a huge dip. What's driving that?
Melius Research has expressed concerns, focusing on the company's downstream exposure with its Amazon business, and also this recently downscaled analyst event that apparently left market watchers scratching their heads.
Yeah, when a company you had high hopes for drops nearly 50%, it's definitely not cause for celebration. It raises important questions. Has Marvell lost its competitive mojo? Can this slide be reversed in such a fast-moving tech market?
Absolutely. And not far from that debate is the case of CoreWeave.
CoreWeave. Okay, what's their story?
Unlike Marvell's struggles, CoreWeave stock has seen an astonishing rise, 200% in just a month.
200%? In a month? That's incredible.
It really is. The bulls are celebrating a significant new customer win, which seems to be fueling this rapid ascent.
Okay, so that's the why behind the surge. But is there a catch?
Here's the twist. Bearish positions have actually built up amid concerns that the company is still hemorrhaging money.
The classic growth at all costs versus profitability debate. That polarization must be spurring some spirited discussion.
It is. Is CoreWeave just riding a wave of hype, or does it have a robust underlying model that can justify such explosive growth? It kind of reminds you of a roller coaster, right? The initial climb, The thrilling plunge, and you're wondering if your next ticket is a smooth ride or an unexpected drop.
That's a perfect analogy. And these stories really highlight a critical tension in our market today. Companies that seemed invincible, grappling with challenges, while emerging entities see extraordinary valuations.
It's this dual dynamic, isn't it? Reflecting the interplay between hype, technological disruption, and traditional business fundamentals. It creates a continually evolving narrative.
Absolutely. And adding another layer of complexity today are the ethical concerns surrounding President Trump's recent involvement in the crypto space.
Right. There have been reports detailing his participation in a private dinner, a dinner dedicated to his MemeCoin endeavors.
A MemeCoin dinner? That certainly raises eyebrows. Not just in the crypto community, but politically and financially too.
Critics argue there's a deep conflict here, leading an administration that's pushing deregulation for the crypto industry, while personally engaging in its more novel ventures.
That's a fascinating twist to the regulatory oversight versus market innovation debate. You have to wonder if influential figures dancing on that fine line of policy and personal gain upset the equilibrium of market confidence.
And if there's a story behind the story, should leadership in one arena preclude participation in another? It's a complex ethical tightrope.
Definitely something to keep an eye on. All this comes while recent reports from the S&P Purchasing Managers Index surveys paint an interesting picture of the U.S. economy.
They do. The surveys show the economy improved in May after a slump last month. But here's the kicker. Prices increased by the largest amount since August 2022.
Inflation creeping back in. That suggests consumer price hikes could be the next big headline.
Exactly. In a market closely watching inflation and consumer spending, such an uptick signals changes that could touch everyone, from households to major multinationals. It's not entirely uplifting, given the complexities, but it reminds us of the cyclical nature of growth and challenges.
A good point. It's not always a straight line up. Now let's shift gears a little and take a moment for our detailed sector analysis. I know this is a favorite for many listeners.
It is, and in the technology space, we're seeing a real transformation. The divergence between companies like Marvell and CoreWeave really underscores the sector's volatility, doesn't it?
Absolutely. Tech companies are seen as innovators, but when investor sentiment turns, that innovation can quickly look like underperformance, or, in CoreWeave's case, maybe overly exuberant growth.
It leads me to ask, how are tech companies managing risk in an environment where trends change faster than you can reboot a server?
That's the million-dollar question. Speaking of risk, the finance sector is also facing unique challenges.
With the sustained, albeit cautious gains we saw this morning, financial institutions are bracing for a period where even slight changes in interest rates could have magnified effects.
They're in a tough balancing act, aren't they? Navigating tighter regulatory environments while still trying to ensure lending practices support economic growth. That's no mean feat.
It's a bit like trying to keep a dozen cats in line, isn't it? You promise order, but chaos always finds a way.
Ha! A perfect analogy for finance. What about the energy sector?
Concerns remain high there too. Fluctuating oil and gas prices, combined with the global focus on renewables, create a lot of uncertainty. There's constant debate on when fossil fuels will pass the baton to greener alternatives.
And opinions are as varied as they are passionate, I'm sure. You see many energy companies investing in renewables, but still relying on traditional revenue.
Exactly. It's like watching a relay race where the baton pass can be smooth or a stumble. How do legacy energy institutions adapt quickly enough in an era focused on sustainability, as much as shareholder value?
Another critical question for the sector. Looking beyond our domestic scene, the global market implications are definitely worth noting.
They are. Fluctuations in trade policies, combined with economic signals like rising U.S. consumer prices, suggest global markets might face waves of change. Emerging markets, in particular, could be quite sensitive.
So if you're invested internationally, hedging those bets becomes crucial. It reminds me of the old saying, don't put all your eggs in one basket.
And in today's global economy, that basket often resembles a tangled web of supply chains and regulatory bodies. It's complex.
Very. Expert insights seem to point to a future where these mixed signals could give way to more pronounced market movements, right?
That's the sentiment. Some analysts believe the current modest gains could be the calm before a more significant correction or rally, driven by underlying fundamentals. In tech, the rise and fall of players like Marvell and CoreWeave show innovation is a double-edged sword.
potential and risk, hand in hand. And in crypto, those robust gains in Bitcoin and Ethereum hint at broader acceptance, but with the usual caveats about regulation and manipulation.
Right. I often find myself asking, are we witnessing a new era of financial evolution, or are we just caught in another speculative bubble?
That's the big question, isn't it? And the debate on market durability isn't just academic, it has real implications for investment strategies.
Exactly. If you're diversifying to withstand a potential correction, should you focus on tech startups with solid fundamentals or established players? And with crypto, do the gains justify the unique risks?
These are the kinds of thought-provoking questions every investor should be asking themselves right now. It's a tumultuous time.
It really is. On a slightly lighter note, sometimes the market really reminds me of my morning coffee.
Oh? How so?
Well, there's bitterness, smoothness, and sometimes a bitter aftertaste when you least expect it. I mean, who hasn't had a day where a market dip feels like that extra shot of espresso kicking in when you were trying to relax?
Haha, I can definitely relate to that. It's all part of the dance, isn't it? And it certainly provides fodder for spreadsheets and dinner conversations.
Absolutely. Diving back into the in-depth coverage, let's contrast those two key stories vying for attention today, Marvell and CoreWeave.
Marvell's story is a cautionary tale, isn't it? Once a hot AI stock, now battling headwinds from operational hiccups and shifting business units.
Right. The focus on its traditional partnership challenges, especially with Amazon, makes you wonder if previous successes were built on unsustainable momentum. Has the AI wave passed them by?
Or is there a turnaround strategy brewing that we just don't see yet? It's hard to say.
Conversely, CoreWeave's explosive performance is a very different narrative. A 200% surge in a month, that gets anyone's attention.
It does. But as we discussed, it's double-edged. It shows the market rewards potential swiftly, but those underlying concerns about operational losses can't be ignored. It's classic, high risk, high reward.
Investors are betting not just on future potential, but on the ability to turn those losses into gains. It's that age-old debate. Can growth truly be sustainable without solid fundamentals?
A question as old as the market itself. Then comes that ethical debate swirling around the president's MemeCoin Dinner.
This isn't just about a dinner. It's a symbol of the tension between political influence and market innovation. An administration pushing deregulation for crypto, while simultaneously engaging in potentially self-serving activities.
The irony is thick, isn't it? In this hybrid world of politics and finance, what should the guiding principles of engagement be? And how do we hold influential figures accountable without stifling innovation?
Precisely. Complex questions with no easy answers. Finally, the S&P PMI survey showing significant improvement after a recent downturn.
Right, bringing us back to cyclical resilience. With consumer prices rising, the highest jump since August 2022, there's that undercurrent of recovery, but with inflationary pressures we can't ignore.
How will that affect consumer spending? What does it mean for retail and large industries? These are vital questions economists and policymakers are grappling with.
Definitely. When we step back and look at the overall market picture, it's this blend of cautious optimism, rapid tech evolution, and politically charged events. It creates an atmosphere of constant recalibration.
There's a palpable sense of both opportunity and caution. Market participants, from individuals to institutions, are navigating choppy waters. Which brings us to expert insights and predictions.
What are the veterans saying? Are they bullish or bearish?
Some are advocating for measured optimism. They think the broad-based gains in foundational indexes signal a market absorbing new info, not reacting to panic. Innovation, especially in tech and fintech, could drive the next cycle.
Okay, so a hopeful outlook from some. But what about the traditionalists?
They warn that without robust risk management, the enthusiasm might just be paving the way for the next crash. So, are we on the brink of a market renaissance or building castles on sand?
It seems like opinions are as split as ever. For investors, understanding these dynamics isn't just about reading numbers.
No, it's about contextualizing them within real-world trends and policy shifts. It's almost like reading a suspense novel where every chapter reveals new twists. And that's what makes this space so endlessly fascinating. and, frankly, a bit addictive.
Totally agree. And speaking of context, global market implications are clear. Events across the Atlantic, in Asia, emerging markets, they're all interlinked in ways that defy simple explanation.
Right. As U.S. consumer prices creep higher, similar pressures can be expected in import-reliant economies. Fluctuations in oil prices and geopolitical tensions impact global trade and investment.
It's a global game of chess. Every policy shift or consumer trend can reverberate across continents. We might focus on domestic data, but being attuned to global currents is indispensable.
So how should investors approach this intertwined landscape? One perspective is emphasizing diversification, not just across asset classes, but geographically.
That makes sense. As supply chains evolve and new markets mature, reallocating portfolios to hedge against local downturns seems wise. Diversification is a way of thinking about risk that transcends borders.
Exactly. In a world where events on the other side of the globe can affect your portfolio overnight, how resilient is your investment strategy?
A crucial question for our listeners to ponder. Before we wrap up, let's leave everyone with some final thoughts and key takeaways from today's briefing.
First, those modest gains in the major indexes reaffirm that despite sector volatility, the overall market is maintaining a steady, cautious recovery.
Second, headline stories like Marvell's decline and CoreWeave's rise are attention-grabbing, but they also serve as reminders of the inherent risks and rewards in our dynamic market.
Third, ethical questions, like those raised by President Trump's MemeCoin Dinner, underscore the necessity of critically evaluating the motivations behind market moves from both corporate and political figures.
And finally, the macroeconomic signal from the S&P PMI points to a recovering economy that, despite challenges, is showing signs of life and resilience, even with inflationary pressures.
Throughout our discussion today, we've explored everything from specific tech stocks to broader economic trends, global interdependencies, and even the lighter side of market behavior. We hope you found this insightful.
For those who thrive on detailed analysis and intelligent debate, remember, every piece of news is a puzzle piece contributing to the bigger picture of our economic future.
Absolutely. Before we sign off, we'd love to leave you with a few thought-provoking questions. How prepared are you to pivot your strategy if a promising tech stock shows warning signs?
Is your portfolio diversified enough to weather economic shocks from unexpected consumer price jumps? And in an era where politics, technology, and finance blur, how do you decide which ethical concerns influence your investment decisions?
These questions deserve more than a quick glance. They call for deep analysis and plenty of discussion. We encourage you to think about them and join the conversation with our community and our AI co-pilot.
Your insights and queries help shape a more informed and proactive investor community. Remember, whether you're reviewing charts or just starting your day, the market waits for no one.
As we wrap up this edition of the PAI Morning Briefing, let's quickly recap our key takeaways. Steady, modest gains in traditional indexes show stability can be found. Aggressive moves in certain tech stocks remind us caution is essential.
Global economic indicators paint a mixed but hopeful picture, and ethical debates underscore the complexity of today's market dynamics. And a special shout out to PantheonAI, your information co-pilot.
Navigating this landscape can feel like solving a Rubik's Cube blindfolded, but with the right tools and insights, you can turn chaos into clarity. We hope you'll join us again tomorrow for another engaging episode.
We'll continue to explore the twists and turns of the financial world. Until then, keep analyzing, stay curious, and remember, learning shouldn't feel like a full-time job.
Thank you for listening, and have an insightful day ahead.
PantheonAI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.